to the AAA session. It is time for Ask an Analyst. It's Monday, the 10th of May. How's everybody doing today? I'm Chris Pulver. I'm running the session solo today. If you're out there typing a wire, yes, you can see my screen. Actually, just see my face right now. We'll get into the setups here in just a second. I want to go ahead and just bring up a risk disclaimer very quickly. We understand that there is risk in trading. You should know the deal there. Let me bring that up before we officially jump into the charts today. But if you're out there typing wire yes and say what's happening, we're talking about some stocks, talking about some Forex pairs today. Take a look at some cryptocurrencies. Interesting weekend with Elon Musk hosting SNL. Dogecoin apparently is a hustle. Okay, so there's the chart. Let me bring it up on the screen. There we go, traders. So whether you're trading stocks, options, futures, Forex, cryptocurrencies, whatever asset class you're trading, you understand there's risk in trading, please and always use trade capital only. Anything that I'm talking about is for educational purposes only and is not intended for investment advice. All right, I want to get into the charts here today. We had a lot to talk about. It's a busy week, pretty interesting earnings week. I will find a screenshot here. I believe. Let me go over into my chats from earlier today. Just finished up a live session with Equities on Demand. I'm looking for my earnings play. Actually, it's in my email right here. There it is. If you would like to take a screenshot of this on your computer, feel free. What you should be able to see right here are the earnings from this week. Now, it's not all of them. There's actually more than this, but these are some of the big ones and notables for the week. So I know the font might be a little bit small, but we've already had before market earnings on several notables today, including Marriott International. After market today, 4 p.m. Eastern Time, is going to be on 4:05 aftermarket earnings on Roblox, Virgin Galactic, Affirm Holdings, and Novavax. Tuesday, some notables. We have Palantir, we have Electronic Arts, QuantumScape, we have Lemonade Inc. Let's see, Wednesday, we have Wix, we have Wendy's Company, we have Vroom, Sonos, Poshmark, that's a big one there. Let's see here, Grow Generation Corp. Thursday is probably some of the companies that most stand out for the week for me. Alibaba earnings before market open on Thursday. We have Yeti Holdings. We have the Walt Disney Company, or Disney, at aftermarket on Thursday. We have Airbnb, Coinbase, DoorDash, Farfetch Limited, and Luminar Technologies. So I want to take a look at a couple of those stocks. Also see where we're at for the week in the major indices. We had an amazing turnaround in stocks last week. So traders that were with us last week in Equities on Demand, we ended up having a not so pleasant Monday through Wednesday, and then we had an amazing Thursday and Friday. So to show you what that looks like, I will go onto my charts here. We had some trade setups in our Equities on Demand strategy, and that included we were in on Etsy. I'm going to type this up here. So we were in on Etsy, and we were in on Wayfair, on ILMN, MCHP, ADI, AVGO, ADSK, BDX, and AAPL, Apple. These were all of the weekly plays that we took a stab at, and we ended up taking a loss on Etsy, a win on Wayfair, a win on ILMN, a win on MCHP, a win on ADP. I'm going to sound like a broken record, but this is the best thing to see. We won on 8 of our 9 trades. So a nice little strike rate last week after, like I said, Monday, Tuesday, and Wednesday. If you think about this, let's say this is our week on Monday, and we're trading all the way through Friday. Okay, Monday we were down. Okay, Tuesday we were down. Wednesday we were down. Even Thursday morning, we were down. And then Thursday afternoon, the market came roaring back. And then Friday, the market stayed bullish for the day. We had a weaker than expected, way weaker than expected, non-farm payroll number on Friday, and the stock market continued to run pretty hot. So what looked to be a volatile down week ended up turning out where the SPY made new highs, the Dow Jones made new highs, and the NASDAQ has a massive indecision candle. So a lot of stocks ended up bidding higher for the week, even though we started off on rough footing. So goes to show there's a lot of volatility, and it goes to show that trade setups are taken and strategies are taken for a reason. So a nice week for our traders in Equities on Demand. We also have amazing opportunities coming up We took some profit on BIDU. We're actually in some profit again on BIDU. This is Baidu. They have earnings. It's not this week. It's not this week, I don't think. Earnings Whisper BIDU. Let me check and see when they have earnings because I know it's coming up pretty soon. May 18th. So that should be next week on 15th, 16th, 17th, next Tuesday. So there will be some earnings plays on Baidu next week. We are looking for this price to continue to run back down to this low. And if that's the case, we're going to be at some nice profit on that setup. And we actually rolled in some, we're actually, long the put at 195, and that's up $11. And we have a sold put down here near the low. And anyways, looking good to the downside. So hopefully it stays there as we roll into earnings next week and make some nice bucks on that one. We also have a play on Disney. So with earnings this week, Disney's been somewhat sideways. I'm curious to see if earnings this week on Disney will get us up to these levels or down to these levels. And if one of those two happens, our little strategy for a directionally neutral approach, if price goes up or down, we're going to be able to make money on one or the other side. So it doesn't matter what it does for us. It just means that we have earnings. We had a contraction cycle. We're looking for volatility to increase on Disney. Hopefully this week is a nice way to get it. So I'd say the downside, look for 179. To the upside, we're looking to retest 190. And as long as we hit one of those levels, we'll be a nice profit on Disney. Okay, so some good stuff there from Equities on Demand. Nice to see everybody. TJ, nice to see you there. Yep, thanks. David is here. Chris is here. Larry in the house. Larry L, Larry B, Ruben's in the house. What's up, Ruben? Derek, good stuff. Yeah, hey Derek. I saw you this morning, right? Yeah, you were in my my YouTube session this morning. Good. Okay, so busy week in stocks, lots of earnings to talk about. I also want to talk about job numbers from last week on Friday. If we go into a Forex Factory calendar really quickly, job numbers were pretty soft, way worse than expected. The job market, so 990 was the forecast last week. 990,000 jobs was the forecast last week, came in 266 with a negative revision. Okay, we also had higher than expected unemployment rate, and then we had this amazing average hourly earnings. I think what this provided last week was the excuse for the Federal Reserve to stay bearish, or I should say stay dovish and stay accommodative. And you can see that the dollar has been hit pretty hard and continues to be a weaker currency until the reality is, the reality is we can't sit at all-time low interest rates forever. We did, when we slashed interest rates under Bernanke in 2008 and 9, and we kind of bought our way and financially engineered our way out of the financial crisis in 2008 and 9 with real estate. We started to taper in 2014, 15, 16 under Yellen. That went from 2014 to 18. It is a, it's a step-by-step process. It is a slow process, but we are also seeing things that are just ridiculous. Let's take a look at the dollar. Here's the DXY. Okay, dollar index indecisive on the day, but we're coming back to revisit some of these lows from February of this year and the lows back in January. I would not be surprised if we see the dollar test this low. What I'm really interested to see is if we just simply wait for the dollar to break this trend line. To keep this really, really simple to follow, if the DXY breaks this trend line, these are the levels I'm looking for major support. If we get major support in this area on the DXY, great. I'm looking to buy the dollar and take this right back up into equal highs, and that yearly target around 94 plus. Okay, so pretty simple. I'm just going to take this trend line right here and attach it to these recent highs. So it looks eerily similar to what we had earlier. We had this massive sell-off in November of 2020 all the way into the start of the year. Really aggressive downward trend on the dollar. Okay, so if we have another aggressive trend in the dollar, I wouldn't be surprised if this ends up getting found and we make our way back up and we just have range-bound trading. So I'm bullish, right? Like I have positions that are bullish on the dollar over the next 1 to 3 months, and those positions include the following. So I like dollar CAD long. I like New Zealand CAD or New Zealand dollar short. I also like dollar Swiss long. Those are my three favorites right now. Aussie dollar, I would say short, okay, at 8,000 to 8,100. So I'm not short on Aussie dollar right now, but I am long right now on dollar CAD. I am short on New Zealand dollar. I am long on dollar Swiss, and those are all small, and I'm looking to kind of build and hold. We also have some fresh numbers on the Japanese yen. We have some highs that were poked today. We had a big move out of the pound crosses this morning, and I want to take a look at a currency pair on the pound. Let's go to pound dollar. Okay, pound dollar has gone straight up. It's at 1.4134. This is a daily chart. Look at today's candle. Okay, today's candle is like straight bullish. And if you want to see what this looks like, take a look at a currency strength chart. And this is what this is what strength looks like at the open. You know, we just came from a weekend. So Sunday's open. So this is the Australasia Open at 5 p.m. Eastern time. Brokers open up. Pound is strong. Pound never gives back anything. It has been bullish on the entire day. Okay, now what does that all mean? Well, here's what I'm watching really carefully. I think that the pound is a potential pre-summer push in the making, which means the pound might sustain some of this strength over the next couple of days, possibly most of this month. However, here's my tell, and this is going to be my plan around the pound. I think the pound US dollar is going to be one of my favorites. Okay? All right. This is going to be one of my favorites. If we see the pound US dollar. So look at this high back in February. If the pound US dollar comes right up to this resistance right here, so resistance here, resistance here. What I'm looking for is a noticeable rejection in price. Okay, so let's go back to that move in February. Can everybody see here that we had the run up, a sharp rejection, a failure to take out the high, and then price came back down to the lows? Everybody can see that? So we had a pretty noticeable rejection right here. Okay, I'm looking for the same thing. So let's say that price comes up to this level and forms a big indecision candle at the high. Well, I might look for this to break out below, come back and retest, and then head back down. And I think step one is, can we get back to this breakout point around 1.40? Step two is, can we complete this move all the way back down into range support, which is down here around 3,700. So if we go from 4,200 highs all the way back down to 3,700, that's a 500 pip opportunity with a pretty tight stop area. Because if I'm wrong on this trade, if it goes up to this level, forms indecision, and let's say I start selling it, if it blows through this high, then I'm probably going to stop out of it, unless we have more of a topping pattern that emerges, and then I'll get back in. But if I'm going to short this pound US dollar, it is going to have a stop loss. So I'm looking for this area right here to be my chance to short it high, look for some cooperation and price to the downside, and put a stop loss above. So I do like pound dollar for potential setup this week. I'll be talking about that quite heavily tomorrow in the Flex trading room tomorrow morning. I also like the CAD yen. CAD yen from a technical standpoint is as good as I've seen in a long, long time. We also have a weekly target, multiple daily targets, weekly target, weekly target. We have 3 weekly targets in a row, which is pretty absurd. So I'm looking at something like this on the CAD yen. I'm currently short. I ended up shorting it right around this 89.10 level, and I believe I shorted it on Fridays. It was Thursday night to Friday morning's high, and so I'm sitting here break even around like 89.70. So I'm not that far off. I'm upside down like maybe 30 to 40 pips on my CAD yen. All I'm looking for in this trade is an aggressive trendline break, a potential rising wedge, or just price to come back down and break the structure, make its way back down into this low. If we get to 8,900 or 8,850, I'll be pretty satisfied with a little chunk of profit on the CAD yen. Just looking for a little pause on this currency pair. Okay, let's go to Swiss yen. Okay, Swiss yen, we're pausing around 120.90. We have some massive resistance on this currency around 121.50. So another one, I'm looking for some type of alignment with some yen strength, possibly from some Swiss weakness. A couple alignments that I like. I like Swiss weakness coming back down to these currency pairs, or these pivot points. So if we see Swiss weakness and stronger JPY, I could see CAD Swiss going up. I could see dollar Swiss going up. I could see Euro Swiss going up. I mean, there's actually quite a decent alignment against the Swiss where I could see further Swiss franc weakness. Now, the question is on this currency pair is, will the Swiss be weaker than the yen? Because they're both trading with the safe haven bids. Here is a currency strength chart. We can see that even today, everything was pretty much quiet except for the pound. right? The pound was the outlier today. So it is what it is. I'm going to see if that's going to be a sustained run for the week, or if that is a short-lived pop-up rally, and the pound ends up having this big move on Monday, fading from Tuesday all the way to Friday, and the pound gives back most of what it gained this week. I'm interested to see how it shakes out with the Swiss franc and the yen. Do we start to see anything on the 10-year note, the TNX, currently trading at 1.59? We had a massive flush out last Friday with non-farm. The 10-year Treasury note dropped down to 1.48. This happened to be, if I'm not mistaken, a 236 Fibonacci swing. So take a look at this. That's a 236 point. Yep. So we came down to that 236. We reacted really nicely off of that. I am interested to see, do we have this, 236? Price didn't close below it, because I would say the probability is if we close below the 236, there is an extremely high chance that we're going to drop into this 382. Okay? But with this type of reaction off the 236, I wouldn't be surprised if price is trying to rally back up to these highs around 1.75, 1.80. And if this happens, this might make the stock market a little bit on the nervous side. So if we start to see the 10-year note rallying, I think it's going to be difficult to see stocks make new highs this week. Okay? If we see the 10-year note continue to drift lower, let's say it drifts lower, then we're going to see the stock market continue to push higher. It's just how we've seen this play out. If it stays in a corrective phase to the downside, this is the 10-year note. This is the reality with this. The reason I'm talking about this chart is if the 10-year note starts to get up towards 2 to 2.5%, probably 2.5%, you're going to have tens of potentially hundreds of billions of dollars that are going to start making this migration from risk to safety. Okay, from risk to safety. And that means, because it is forcing investors that have retirement money to sit in stocks, which is a much riskier play. But if we start to notice that the 10-year notes and the near-term interest rates are going to start getting above 2, 2.25, 2.5%, we're looking at inflation right around 3%. Whether you agree with that number or not, traders, investors are willing to take the safe haven of 2.5 to 3% bond yields or treasury yields and play that shorter, low volatility, low risk play to keep their money safe, as opposed to more exposure in stocks because they're looking for growth. Also, I'd say the last 12 to 24 months, we've seen so much profit in stocks, and so many investors have become wealthier that, having a chance to go into safety and preserve that capital and preserve that wealth, I think is going to be a fair trade-off, considering that stocks might be going sideways. Make sense? So anyway, numbers to watch on the 10-year note. This is TNX. If we start getting to new highs above 1.82%, that's going to make it pretty difficult for the stock market to continue to see new highs. Another thing to pull from this 10-year note is if this goes higher, this should also act as a leading indicator for the dollar. If this goes higher, the dollar should start to go higher. Okay? This is why I was actually long the dollar going into this year. When we started to turn into 2021, I was long the dollar. And this 10-year note continued to rally. We saw a decent little start to the year on the dollar index, getting stronger. We have given some back in the dollar, obviously. But if this is a corrective move in the 10-year note for another rally, then again, that could be a corrective move on the dollar for another rally. And that's why I'm still pretty bullish on the dollar over the next 1 to 3 months. Okay. All right. Anything else here that I'm liking for currencies? 8.24. We're fine on that. Other pairs. I know that pound yen made a new high today, but it's interesting how this thing moved. If you look at the daily chart on pound yen, trader asked me about this on Friday last week. I don't necessarily see this as a broken setup. I still think that the highs on the pound yen are, extremely overbought. Okay. And this is also, depending on where we settle this week, if you want to write down a number on the pound yen, I would look for price to return towards 152.50. What I don't know is, are we going to have today's rally pause, rally more tomorrow and Wednesday, and then we end up topping out by the end of the week, and then over the course of the remainder of the month, maybe we give that move back. All right. Or do we have this pop up for today? We take out the high, we score a point for those bulls, but then we fade that move all the way back down within the next couple of days. So the pound by tomorrow, and I'll do this in the flex room tomorrow, we'll be reviewing pound crosses because I want to try to play some decent price action and see, is this a fake out by the pound, Or is this a breakout by the pound? Because breakouts mean we're going to stay long on pound crosses, okay, or stay long on pound looking for additional strength. Fake out is this was a really silly move where it pumps up the bids on the pound and then it fades them all the way back down, and we have that bearish setup, or what was created today is completely evaporated by the end of the week. All right, so that'll be what I'm looking at for pound crosses. I am looking also for some CAD weakness. Let's talk about oil for a second. Okay, oil is sitting at $65, right? I would be looking for oil to do something like this. This level here, lots of resistance. So if we see oil remain very choppy right in here, don't be surprised if this $68 area holds as resistance. I'm looking for oil to drop back down into these lows, which is around $58 to $57. Now, oil could come down lower. I could see oil coming back into this area. We've got some pivots. We've got some pockets. We have some demand sitting down here around $55 to $54. If that's the case, okay, if oil drops, then this should also help drop the CAD, the CAD. Okay, if the CAD is dropping, we might see other commodity-based pairs dropping, like the Aussie, like the New Zealand. Okay, I don't know if that's going to be enough to be a risk-off trade, in the stock market, in the currency market. But oil typically has a pretty strong correlation with CAD. So if oil does, end up breaking the structure, having this resistance hold, but turning the corner to the downside, I think oil drops towards the mid 50s, possibly low 50s, and then we figure out if oil is going to be range bound from there, or maybe there's a bigger move coming in oil with weaker dollar, commodities still getting very, very strong. Another thing I've been talking about with traders, which has just been nuts, is lumber. Looking at lumber future prices. Okay, big correction already today. Okay, lumber is down $70 today. We had a high around over $1,700. We're down to $1,617. So lumber's already down $100 today. Okay, now I talked about this last week in my YouTube sessions. We have I repeat, six pivots in a row. I mean, in all of my years of trading, I've never seen a stretch like that on a commodity or a currency. I've seen it in stocks. We have pivots that could be missed in stocks and be missed for a long time. But to have this many pivots in a row in a commodity or Forex is very, very, very rare. So my concern is that, again, it wasn't a concern. It was more like I had traders that are like, how do I short lumber? Well, if you're a futures trader, you're looking to short lumber. But the problem is it was literally, breakout after breakout after breakout. It was 8 straight weeks of bullishness on lumber. And so I see that we're balancing. Okay, that's good. Now the question is, are we going to have this rally, pull back a little bit and then keep the heat going? Or is this going to be, there's the low, there's the high, and this thing has to balance way more than what it did? Maybe this previous resistance around $1,000 is a very realistic target. We have a ton of weekly targets here. We have monthly targets as well. So it just looks like, lumber needs to fall. Okay, technically speaking, it needs to fall. So I will be watching this price very closely this week. If we do see some decent price action, you can see the 4-hour chart's pretty straightforward. If we have this high, this low, lower high, lower low, then that means we're putting a bit of a short-term high in lumber, and let's see how low it can drop. Okay, I'm not saying this is going to affect the housing prices or anything like that. Maybe it's just a sigh of relief. Maybe it's just to show that the chart's not broken. Okay, but something to certainly keep an eye out for. All right. Also, I'm trying to think anything else. Let's go to cryptos, and then I'll start wrapping things up. If you have any questions, make sure you let me know. If there's anything you want me to review today, let me know. I'll do it for a few more minutes. We'll probably be live for another like 5-10 minutes. Okay, Bitcoin. Let's go to some cryptos here. Bitcoin is at 57,540. I have a chart alarm set at the high, which is around 64,854. We have a chart alarm at the low at 47,212. I have said this for the last couple of months. I expect Litecoin to outperform Bitcoin. And this is absolutely happening. And I still expect Litecoin to outperform Bitcoin by another 20%. And all I'm looking at here, this is Litecoin versus Bitcoin. Take a look at this chart. From current price right now with this exchange, this is Litecoin versus Bitcoin. From this current exchange all the way to that falling wedge starting point, we're looking at another 20% right there. Okay, now whether that looks like Bitcoin goes sideways and Litecoin outperforms, I'm looking for at least 20% more on this instrument. This is Litecoin versus Bitcoin. Okay, so that means that if I was to choose what crypto to play right now, I would rather play Litecoin versus Bitcoin. Okay, I would also rather be in Ethereum versus Bitcoin. Let's go Ethereum versus Bitcoin. And I want you to see what this chart looks like. Can you see that Ethereum has outperformed Bitcoin in the last couple of months? Yes or no? Absolutely, it has. Okay, do I think that Ethereum can continue to outperform Bitcoin? I do. In fact, I'm looking left on my charts, there to there to there. Now I will say that it does look like we should have some type of channel. I'd say that Ethereum has gotten a little bit overstretched, but if we have this blow off move on Ethereum and we end up pausing, okay, we might see this just hesitate a little bit and then continue to go higher and keep trying to score some points for those bulls. So let's see what this looks like. If Ethereum at current price scores a point for the bulls from this high back in 2018, that's another 19.8%. All right. If we rally up here, we're talking about a 70% run. And this is again just outperformance from other coins versus Bitcoin. Okay. Now, do I think that this is technically, behaving? Do I think that Ethereum is just easy to buy right now? I mean, at this point, with it going virtually straight up, I don't love buying Ethereum at these current prices because I think that at any point, and you can see this on your chart, at any point, this is probably going to pull back to this level here, pull back to this level here, have this low to wherever we form a fractal high. If we have a low to a high, it would make sense to drag a Fibonacci there, expect to see some type of pullback on Ethereum. But I think that we also have, more upside to come. So the longer this goes and the more ridiculous this runs, the more likely I'm going to have to start looking at protecting some profit to make sure that I don't give too much back if we have a correction. Okay? So that's what I want to see is if it does run like crazy. I mean, I'm sitting at new highs. In fact, I'm going to check my phone right now. Let me look at my Coinbase. Let me check here. So I've got my Coinbase Pro. I'm going to log into it. I was already up around 1,600%. And that's not counting any Ripple, which I'm holding. And it's, yeah. I mean, my portfolio is up like 1,900% in cryptos. So I'm just going to sit and hang on to it and be patient. But the higher these goes, all I'm doing right now at this point is cheering them on. Ethereum goes higher, I'm cheering it on. The longer it goes, the more likely I'm going to start moving some trailing stop losses, protecting some profits in here, because I think that this run to whenever it hits a high, it's going to start pulling back. And I drove this point home, hopefully this morning in my YouTube session on my channel. I said this, look, whatever you do with this, okay, if this runs, and you're in here taking some profit, whatever happens, be happy. Okay, because if you decide, you know what, I'm up a decent amount of profit right here, I'm going to go ahead and protect myself and make some money, then you can't be angry when price goes higher. Okay, you can be happy if price drops because you're like, oh, whew, I dodged a bullet there. I would have, lost some money, or I would have watched some of my profits go back to the market, right? But if you decide to take profit, you can't be mad if it goes higher. If you decide to take profit, you can't be upset if the market dips a little bit and then goes higher. If you decide to sit in this trade and not do anything, you can't be upset if the market drops, because that's what happens. So I say all that for this. We've had a lot of traders emailing us and talking to us about Dogecoin. A lot of traders are loving Dogecoin. Well, I think that I don't want to say that it was buy the rumor, sell the fact, but the rumor was that Elon Musk hosting SNL is going to be this big reason for Dogecoin to go crazy. Okay, it got up to a high around 73 cents. It lost about 40 to 50% of its value over the weekend. Now, you may have heard that saying before, buy the rumor, sell the fact, or buy the rumor, sell the news. The rumor was that Elon Musk is going to talk Dogecoin up again. He's going to do it on a national stage with, hosting Saturday Night Live. And if you watched SNL, I talked about this morning on my YouTube channel. I watched it. It was a Mother's Day special. His mom said something about Dogecoin in the monologue, and he said something about Dogecoin in the Weekend Update, where they really just made fun of it. I mean, they're like, what is it? What is Dogecoin? Tell us again, what is Dogecoin? And at the end of it, it was like, it's a hustle. It's speculation. So I'm not saying that Dogecoin can't rally, but don't be angry. I have traders that, I know that they were holding Dogecoin back in here and they're up a ton of profit and they're like, it's going to $1. And then they see it drop to 40 cents. They're like, now what do we do? You have to accept whatever the market gives you. If you're not going to take profit up here, then you have to accept the fact that volatility will take it down by 40%. If you take profit here, you have to accept the fact that this could go to $1 without you. That's called trading. We're never going to hit the perfect trade all the time. We're never going to nail the tops and bottoms to the penny, to the pip, to the tick. Ever. Right? If you think you're going to be that trader, then wait for the market to disappoint you one day and hopefully you're still around. Because most of the time when traders are that specific all the time or, are trying to catch every perfect movement, it just doesn't happen. Okay? Dogecoin is just a coin. Right? Bitcoin is just a coin. Ethereum is just a coin. Now, we could make arguments that one coin has real projects and real value and blah, blah, blah. And other people will be like, you know what? It's all a big farce. It's all a big fake. So I'm just saying, it's speculation, it's growth. I think it's an amazing opportunity for growth potential. But I don't know what this all means. I don't know if all this changes the landscape of Forex. I don't know if this changes the landscape of paper trading or money trading, fiat system. I don't know. What I do know is that right now, if you're holding anything in cryptos, you're doing pretty well. And you're happy that you decided, you know what, I'll take a chance in this speculation play. And that's where I'm sitting. It's a speculation play that could pay out really well, could pay out a lot, but also could go to zero. And either way, you have to be willing to accept whatever consequences come at you, for better, for worse. And that is trading. So it's never about, one great trade, all your eggs in one basket. It's about having at least, if you're going to have some exposure in cryptos, have some exposure, but nothing crazy, right? And also consider doing your research, trade some instruments that you're more familiar with, trade stocks, trade options, trade Forex, other instruments like that. Okay. All right. So little tidbit there on some cryptocurrencies. I want to take a look at the SPY. So we gapped higher today. We did make new highs last week. We gapped a little bit higher. We're starting to fade a little bit. Dow Jones gapped higher, opened higher, still bullish on the morning. I'm going to go to the NASDAQ. Wow, tech stocks dropping pretty heavily today. I want to go to the IWM as well, the Russell 2000. Russell 2000, lots of indecision. Wondering if we're going to have some highs to lows, maybe some of this turmoil in the IWM over the coming weeks, a lot of indecision as we go into summer trading. So I think that, high growth right now is at a bit of a standstill, in my opinion. I think that tech stocks had such a run last year, they're going to struggle. I think that value stocks are probably the way to get. That's what I'm doing in my portfolio is I'm starting to look at some accumulation zones in value stocks. I like companies that produce raw materials. I like companies not so much, mining for gold. I don't like energy stocks as much. I'm honestly like anything with oil, petroleum, gas. I don't really love it. If it's raw materials like steel, aluminum, building materials, I mean, you could be long on the XLB, okay, which is the Spider Trust for basic materials. This thing has been bullish for the last 2 months, up nearly 10, 15%. I mean, this is one of the most hottest sectors going right now. Do I think it's going to come back down a little bit? I do. Okay. Do I think that we have a bit of a top that comes in today with the reality and the technicals? Possibly. Okay. So that's what I'm interested in watching. Okay. All right. Any questions for me? I know we've been going for about 34 minutes. I'd like to wrap it up there. Busy week in Equities on Demand, busy week in all of our trading rooms. If you have any questions, make sure you tune into those respective sessions. If you're not in a trading room, if you'd like to, again, ask. And these, if you're watching this video after the fact, if you're streaming live, we have plenty of ways to get hooked up with myself and Tyson, Gary, Chief, Tad, our whole team. If you're looking at trading rooms, any type of continued education system, we have it in Forex. We have an awesome course right now in stocks and options called Equities on Demand. We're live every single day. I know that Tyson was supposed to host me today, but he is actually in the process of some real estate transitions because he looks like he's going to be relocating from Minnesota to Florida. And, that's awesome. I'm excited for him. but it's a busy time to be, selling houses and looking to relocate and move because there's a lot of moving parts. Expensive raw materials like lumber, housing prices at, I mean, I'm not going to say all-time highs, but at highs when you have people that are buying houses well over asking, sight unseen, guaranteed appraisals, guaranteed shortfalls, interest rates at super low levels. It's a great time to be looking to relocate, but you're selling high and buying high all in real estate. But it's a good problem to have. Okay. It's a lot different when you're stuck holding the bag and you're like, well, I got this house I can't sell. It's a great problem to be listing your house and having 30, 40, 50 offers. That's an awesome problem. So I don't know if we're necessarily seeing a bubble, but we are seeing just prices and correlations are way out of whack. And again, the market has a way of rebalancing. And a lot of times when it goes extreme to one direction, it swings extreme to the other direction. And we have to be ready for that. Okay. All right, traders. So again, see you this week in the trading rooms. I'll see everybody in Flex tomorrow. See you in Equity as on Demand all this week, Monday through Friday. And make sure you do me a favor, smash that thumbs up button for me for videos like this. We really appreciate it. It helps the YouTube algorithm to have other traders out there in the world that are looking how to trade stocks, options, cryptos, Forex, whatever it is. Find some good free education out there to tune in. Okay. All right. Thanks a lot for being with me today. Happy trading, lots of profits. I'll see you this week in the trading rooms, everybody. Take care. Bye.